The day you become a parent, your life is no longer the only one depending on your next paycheck. And if something happened to you tomorrow, would your child still have the same opportunities you dreamed about today? That's the question every new parent eventually has to answer. Life insurance isn't about expecting the worst. It's about making sure your family can survive it. When you become a parent, your financial responsibilities don't stop if you're no longer there. Life insurance gives your family cash when they need it most, helping replace income without forcing them to make desperate financial decisions. It can keep the lights on, the mortgage paid, and your child's future moving forward. It can also cover childcare, everyday expenses, medical bills, and even final expenses that arrive unexpectedly. Once you understand what life insurance should actually accomplish, choosing coverage becomes much easier. So the next question becomes, how much life insurance does a new parent actually need? The answer isn't based on a random number. It's based on your family's real financial responsibilities. And once you calculate those responsibilities, you'll have a much clearer idea of the coverage your family truly needs. So, how much life insurance should a new parent actually buy? Most people immediately think about replacing income, but raising a child involves much more than just replacing a paycheck. Think about your mortgage, childcare, healthcare, education, and the everyday bills your family still has to pay. A practical approach is simple. Add up what your family would actually need, then subtract the resources they already have. That means considering savings, employer benefits, and any life insurance you already own before buying additional coverage. Once you know the amount, choosing the right type of life insurance becomes much easier. For most new parents, term life insurance is usually the first policy worth considering. It offers a large amount of coverage for a relatively affordable premium during the years your children depend on you the most. The term life works especially well when you're raising children, paying off a mortgage, or building long-term financial stability. Permanent life insurance works differently. It can last your entire lifetime and may build cash value, but it also costs considerably more. Permanent coverage can absolutely make sense, but usually when you have a specific long-term financial goal rather than simply protecting young children. But choosing the right policy is only part of the plan. The next step is deciding how long your coverage should actually last. How long should your life insurance actually last once you become a parent? For most families, the answer is surprisingly simple. Your coverage should last as long as your biggest financial responsibilities. If your youngest child won't become financially independent for 20 years, then a 20-year term often makes a lot of sense. A 30-year term may fit families with young children, and a brand new mortgage that will take decades to repay. But remember, life insurance isn't only for the parent who earns the biggest paycheck. A stay-at-home parent provides childcare, transportation, meals, scheduling, and countless responsibilities that would be expensive to replace. If something happened to a stay-at-home parent, the surviving spouse might suddenly need to pay for services that were previously provided every single day. You should also review riders that could strengthen your policy without buying completely separate coverage. And don't wait too long to apply. Buying life insurance while you're younger and healthier usually gives you more options and lower premiums. One last thing, don't rely only on employer coverage. Don't ignore the stay-at-home parent, and don't forget to update your beneficiaries as your family grows. If you're ready to protect your family's future, get a free life insurance quote from Quote Maestro today.